Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. This is Kerry Lutz. You are listening to the Financial Survival Network. First of all, our sponsor, PrepareWise. Stock up on emergency food. You never know when the supply chain's going to break down. Go to preparewise.com. Type in Lutz in the promo code. They have a great deal for you there. Do it today. Don't put it off anymore. And we don't want to put off Jason Burack any longer either. Jason's bullish on oil. In spite of the recent trends, he's bullish on the metals. We trust Jason's judgment a lot. Jason, how you doing?
Doing good, Kerry, except for the Nationals are losing today in a playoff game. It's the first playoff game in D.C. in a long time, but other than that, I'm doing pretty good.
Yeah, well, it serves D.C. right. Nothing good ever happens in that place.
Yeah, I'll agree with that. After living in D.C. for about a decade, I'll agree with that.
You know, every time I go through there, like when I was driving down to Florida, okay, and I'm there like in early afternoon, and of course, the road through D.C. is closed, and I have to go through local streets, finally pick up like 395 or something in Northwest. I don't even know. That town just aggravates me like you can't believe. It aggravates me more than New York City aggravates me now with Nanny Bloomberg's fascistic regime of bike lanes and bus lanes and doing everything in his power to paralyze traffic so you give up your car and walk to Manhattan. You know, it's just governmental cities, urban areas, they're all the same. They're all about taking away your freedom. You know what I mean?
Yeah, humongous amounts of central planning, Kerry, and basically, like you outlined, DC and New York City, and those are the Twin Towers, to use a Lord of the Rings analogy. So those are the two towers that basically control most of the United States government, most of the United States economy, and to a large extent also a lot of the world economy. Yeah,
so true. So true. And where I am now, it's a town of 55,000 people. One of the few towns in Florida with good schools, and people couldn't be friendlier in the place. I mean, it's amazing. I was really surprised how friendly they are here, and man, it's just a fun place. So, anyways, enough of me in Florida. I'm sure you're getting sick of hearing about it. But what about these markets? We're kind of a little deadened right now. I think it's pre-election run up, but it looks like once the elections are over, we're going to see some breakouts, huh?
Well, let's talk about gold and silver first, and then we can talk about oil. Gold and silver, it looks like the manipulators are doing a really good job selling paper ounces to keep gold below 1780 and silver below 35. So they've been doing this for over a month. The question is, how long are the bullion banks going to be able to keep this? They're losing a lot of physical doing this. So they'll probably be able to keep this maybe for another month or two, but this is a battle, and they're obviously losing the war, and it's a managed retreat like everyone else says. So eventually, you know, the charts, if you look at the charts on gold and silver and you look at the charts for GDX, even the GDXJ chart actually looks pretty good, but the GDX chart, which is the gold miner index one, has put in a really solid double bottom. On the long-term chart, there's a really nice W in there, and then after the W, there's a cup with a handle forming. So it's ready to break out. I mean, we could go sideways for a little while longer, but it's about ready for liftoff.
Yeah, on any kind of a technical basis, the market is looking so bullish, and you know, I just expected it to keep going, but you know, we are in that silly season of the election, and managing these markets, at least for now, is really a prime imperative for the elites to make you think that your vote is actually going to matter, to make you think that happy days are here again, that things are getting better. Unemployment is down. Of course, employment's down more than unemployment is down, but they don't tell you that. And, government statistics are always dubious under the best of circumstances. But here, 7.8% unemployment, which is somehow acceptable, is just purely fraudulent, isn't it?
Exactly, and they can move people, out of the categories there and not count them anymore. And when you have, with the Bureau of Labor Statistics, when you have the birth-death model, I mean, the whole thing is just a fraud. The birth-death model, for your listeners who are not familiar, assumes that when a job dies or a business dies, that the workers will automatically try to create another job. So this is a false assumption from the beginning here, and all the statistics involved in that are just basically fraudulent. The most reliable statistics are the private sector stuff, like ADP payrolls and stuff like that. So those are going to be far more reliable, the statistics coming out of the private sector.
Yeah. So in other words, to interpret all that, the economy is not getting better. It's getting worse. And that's why, in the final analysis, gold and silver are going to do well, and oil as well, because you got to have, no matter how bad things are, got to put gas in your car, got to heat your house, even if your consumption goes down, which is really interesting how much gasoline consumption has declined in the United States. Nonetheless, heating oil is still up there, and natural gas consumption's increased. So our appetite in the U.S. as well as the world for energy is unabated, right?
Exactly. And global demand for oil is still growing at a pretty solid clip here. And it's really tough for them to find cheaper supply to replace the oil. Conventional oil production peaked in 2005, 2006. And we have a lot of oil left, but production costs in this unconventional oil is much, much higher. It's 3 to 4 times higher than the conventional oil production. And for oil sands and some of the other ones, it's even more than that. So the what I look at, especially what the central banks have done in the last 6 weeks, is they've put a floor in gold, in silver, and in oil, in my opinion, at certain price points. So we could debate about what the price points are. So I don't think we'll ever see triple-digit gold. Might never even see 1,200 gold again. And for oil, for WTI price, the odds, as long as Ben Bernanke and Charles Evans are going to come out and pre-announce that in January 1st of 2013, they're going to start buying another $540 billion for a full year worth of mortgage-backed securities or other bank assets, then there's just no way really that oil, gold, and silver are going to massively correct to below production costs, because then the marginal producers are just going to turn off the production very quickly. So, as long as your listeners take a long-term view for gold, silver, and oil, that, when there's dips, they buy, and when they get big run-ups, they take some money off the table and have some cash for dips. There's going to be a lot of advantage to take money off the table and make profits off this volatility by central bankers as these central bankers create worse and worse stagflation.
Yeah. And what about stocks and the stock market when you look at a system that's kind of decaying before our very eyes? It's deteriorating. We don't have markets anymore. Largely, they're manipulations for prolonged periods of time, and then market fundamentals are allowed to assert themselves for a short period of time, and then the manipulation starts again. But what's the future of the market? I mean, how are you going to ensure that your wealth is protected in a brokerage account, I guess, is what I'm really asking.
Your listeners should obviously have physical bullion outside of the system as insurance. If they want to have a certain amount of their money in irregular stocks, they have to be really careful about which broker they have. So if they have a Fidelity or a TD Ameritrade or a Charles Schwab, that's going to be a lot safer than having your money at a Goldman Sachs or a Morgan Stanley, because those guys at Goldman Sachs and Morgan Stanley are using 40 or more leverage for every dollar of capital they have on their over-the-counter trades and they trade a lot for their own firm. So this is a big discrepancy here. People are going to have to do more due diligence on the brokerage firms they have their money at now. As far as the general market goes, are not. The fundamentals for the companies, there's a lot of margin compression for companies. I think consumer staple stocks could be very solid instead of bonds, especially the good solid dividend plays. So your Canadian Energy Trust, your consumer staple dividend stocks like tobacco stocks and utilities, those are going to outperform bonds, in my opinion. And if you need to park cash there and you need some yield, that's fine. But I wouldn't be reinvesting the dividends back into those stocks. I would be keeping that cash, and I would be looking then for bargains then in the resource sector. If you get like a big crash, like in a gold stock you like, or a silver stock, or an oil stock, or something like that, I would use that cash to take advantage of those opportunities. And then, like I said, when you take some profits off the table, you can just start pulling some physical bullion out. So you can have some exposure to gold and silver stocks, which I think are solid, because gold only went up, it doubled. It went from 1,000 to 1,800 in the last couple years. And Sandstorm Gold, which was one of our top gold picks in the last 2 years, is up over 300%. And the gold price is not up 300%. So people can still make really, really big gains. And then, if you want to pull some profits off the table, you can sell some of those positions, or with your dividend money, you can buy some physical bullion, and then you can keep a portion in bullion and a portion in gold and silver stocks.
Makes total sense, Jason. And yeah, keep some physical, so you always have that regardless how the system might implode. And then, a portion of your wealth, and obviously we can't give individual advice, and I have to give the usual caveats that we're not financial advisors, so you should always talk to your financial advisor, accountant, blah, blah, blah. And if you listen to us, you'll definitely lose your money, so don't do it. That's what I used to do, Jason, in these private placement memos. If anybody ever read one of them from cover to cover, they'd never invest in anything, because mainly all you're warning people about is that they're almost certain to lose everything they invest with you. But with that out of the way, there are opportunities in the mining and resource sector for certain. And if you hedge that with physical metal, you'll be okay, because somehow these companies are going to survive. Somehow there's a contingency plan in place to reconstruct or rebirth the financial markets, because modern life can't live without money. You cannot live without financial markets, because that's the way that society functions. You can't live without publicly traded markets.
Exactly. And for the consumer staple stocks, for your food, your energy, your heating oil, your natural gas, life would completely shut down. And for your listeners out there, the gold and silver bugs, if there's not miners if there's not miners doing the hard work, pulling the gold and silver out of the ground, the price would just skyrocket, and there would be the physical to buy, there wouldn't be any left. So it's a chicken versus the egg argument here with owning bullion and owning select gold and silver stocks, because you need the gold and silver stocks to make money. You need them to do their job and pull more gold and silver out of the ground, so that way you have more bullion to buy with your paychecks. I think a lot of listeners there who have the attitude that they just want physical and they need to keep stacking, there's going to be mining companies, and there's already one of them, and we've mentioned in past interviews, that already pays a physical bullion dividend.
Correct. So
in the future, I know this is being discussed at a few gold and silver miners now, there's going to be a number of them going forward that have their hyperinflation or worse contingency plans that will either list on another exchange or are going to look into the logistics over the next 2 years of paying a physical bullion out in gold and silver to so more of those shareholders change their minds and buy and hold the stock.
Exactly. And because eventually these miners are waking up to the fact that they're in the money business, because what they're producing is money, in some ways the only real money that we have. On that note, Jason, your site, where do we find you?
Sure. Your listeners can go to the Wall Street from Main Street main website at wallstfrmainst.com. And if they go there, they can get a free copy of the Petro Profit Report, which we sold for $150 a few months ago. We sold a number of copies, and they can check it out. So if they go there, they can get a free copy.
Excellent. All right. So we will talk to you soon, Jason. Thanks so much for being on financialsurvivalnetwork.com, and we'll be in touch.
Great.